Hello friends, a warm welcome to my channel. In today's video we will be discussing something about HDFC Equity Fund. So basically this fund, to start with, is launched in 1995, so it's like almost 25 years old. Absolute returns is 6402%. So if you consider it that someone invested on the very first day when this mutual fund was launched, till date, if that person is still invested, the person would have got somewhere around 6402% returns. It has got like uninterrupted annual dividend feature that is very similar to the UTI one, which I have discussed in the last video that I've uploaded. So if you have been invested, you will always get annual dividend as per this. Mostly this fund invests in large cap. So if you look into the statistical data, so the fund has 97.74% investment in Indian stocks, and out of that 79.36% is in large cap stocks. So if you consider the percentage how this stock is actually invested, it's like almost 80% of this fund is invested in large stocks. This fund was managed by Mr. Prashant Jain since 2003. So Prakash Jain was there for like almost 16 years. Now this fund is actually managed by Mr. Chirag Dagli. So he has taken over from Mr. Prashant since July 22, 2019. So he's pretty new. He's the fund manager, and he's also the fund manager of other HDFC Bank mutual funds that we have. So let's quickly jump on to some of the statistical data of this fund. So if we consider expense ratio, as I've discussed before, that expense ratio is something wherein the bank or the fund manager or the fund management company, they actually charge you for the services that they are giving. That is, if you have invested 10,000 and expense ratio is 2%, you would have paid 200 as a fees to invest, right? So the expense ratio on an average for this kind of mutual funds is 2.17. That is the category average, whereas for HDFC growth fund, it's 1.78%, which is very good. If you look into the fund houses, generally any fund which is at more than 10 to 15,000 crore is actually considered to be a very good fund to invest in. So the fund size of this particular mutual fund is 23,356.95 crore, which is a massive amount considering it's there for like more than 25 years now. The NAV again, if you consider the NAV, it's like 650 rupees. So when any mutual fund launches, generally they start with a NAV of 10 points or 10 rupees. So as on when gradually the NAV increases and your investment also grows, you keep on buying the number of units as per the NAV rate. So if you have invested 1,000 rupees on the very first day of its launch and the NAV is 10, so you would have got like 100 units of that stock. But today at this date, if you are actually investing that same 1,000 rupees after 25 years now, and the unit price, the NAV is 650, so you will actually end up getting 1.3 1.4 units. So just this shows that how much this fund has actually grown. That when it was launched with 1,000 rupees you could buy 100 units, but with the same 1,000 rupees after 25 years you can buy only 1.3 1.4, not even 2 units that you can buy. So the graph below, you can see it has shown a massive increase in this particular growth story. So let's quickly move on to some of the other basic fundamental analysis of this mutual fund. So this is just a summary snapshot. If you see that the number of stocks that are actually sharing, as I've discussed, that this fund house is actually covering 97.74% of stock market investment, that is Indian stock market investment. So this 97.74% actually comprises of 45 stocks. Out of that 45 stocks, the top 5 stocks actually comprise of 40%. The and category is 30%. So any mutual fund which is actually in this category of investment, the industry average is 30%, whereas for this particular mutual fund it's like almost 40%, which is very good. Top 10 stock average, if you see, it's 47, whereas it's 60%. So from weightage point of view, it's the top 10 performing stocks actually hold the maximum majority in this particular mutual fund. So if we look into the breakup, that how much percentage and how all the top companies that I was discussing, the top 10 stock, what are the top 10 stocks that are invested. So this is something I have sorted on the decreasing order, that is on basis of the company which has actually invested more in this particular mutual fund. So it starts with ICICI Bank, State Bank of India. So State Bank of India is almost 10%, 9.63, whereas ICICI Bank is 9.51, followed by L&T, Infosys, Reliance, HDFC, ITC, and National Thermal Power. This is something government power corporation, that is 3.87, Coal India, and Axis Bank. So you see, this is HDFC Mutual Fund. So HDFC Bank has got a share of only close to 5%. But apart from that, it is actually bank driven mostly, because we have State Bank, ICICI Bank, then HDFC itself, and Axis Bank. So four major banks of India, they are all invested, and all the banks actually comprises of almost mostly like 30-35%. If you see, it's like 9.6 or 9, it's like almost 19%, and then HDFC Bank is 5, so it's like 24%, and then Axis Bank is 3, so 27 to 28% of this particular mutual fund. In this mutual fund, you can see almost 28% of the investment is actually coming from the top four banks that we have in India. So if you look into the percentage wise, I've discussed this before on the first slide, that the large cap holding is 80% almost, whereas industry average is like 53%. So it's massive. Whereas every mutual fund have like on an average large cap investment close to 54%, whereas this particular mutual fund, they have like almost 80%. Mid caps is 9%, whereas industry is 20%. Obviously, other mutual funds, they put in a lot of funds from the mid cap stocks, but this fund is relying mostly on large cap funds. So you see that it's mostly 80%. So let's quickly jump on to the next slide, and we'll try to see that what exactly is the return that you can expect, or the return that actually has got generated. So if you see that the returns, this is also something, a calculator, and this is something based on that you have actually invested 1,000 rupees per month on an SIP basis. So how much you have actually garnered. So if we see that if you have invested 10,000 investment, so yeah, this for this particular fund, by default it actually shows you how much return you have garnered. So definitely mutual funds are something that wherein it's not like stock market that you buy today and you just think that you will get your benefits in 2 weeks or 3 weeks time. It's not like that. The ideal benefit of mutual funds is something which you get after at least 2 to 3 years, not before that. So I won't be discussing like one week, 1 month, 3 months, 6 months. Not necessary, because this will actually not give you the right figures. So let's quickly jump on to 3-year, 5-year, and 10-year figures. So 3-year figures, if you see, if you have invested on 17th February 2017, I've just made this video recently, so that's why you can see that it's 17th of February. Today it's I think today the date is 20th of February, so it's like 3 days old data. So 3 years return, if you see, it has actually given you 26% return, which is like almost 8% annually. 5 years return, if you see, it's like 34%. That's like almost 5 to 6%. 10 years, if you see, it's like 190%. So almost 19% return. So if someone has invested in this particular fund and they have invested for the last 10 years, they actually have got the 190% return. Whereas since inception is like 25 years, so I'm sure there will be very minimal people who have actually started investing on the very first day of when this mutual fund was launched. So that's why from the inception day, it's not possible that everybody is invested. But 10 years actually is a realistic figure, wherein you know that most of us who are into stock market is between the range where they actually start investing is like almost in 25 to 45 or 50. So if you have started investing at the age of 25, then this data makes sense. People who are watching this video, if they are in their 35, 40, if they have invested in the 25, so they have actually covered this 10 years. So this figure gives you the realistic figure that how much you can expect. So in 10 years, it has given 90% return. So this is about fixed term investment, wherein people have invested 10,000 rupees directly and they have not done any SIP. And the below table, it actually shows the SIP one, whereas people are doing SIP of 1,000 rupees every month. They are depositing 1,000. So if you have done, I'll again jump to directly to 3 years. So if you have invested for 3 years, you have given 36,000 to this mutual fund, and return you have got is 37,891. That is 5.25% return. For 5 years you have given 60,000 and the return you are getting is 72,000 approximately, that is almost 20% return. And 10 years, which I was considering calculating as per the above one. So 10 years, if you have done one time investment and you have kept the fund for 10 years, you are actually getting 190% return. Whereas when you have invested this on an SIP mode, you are getting 74%. Definitely SIP mode, your return will be less, because for as far as fixed or one time investment goes, you are actually investing a big fund and you're keeping that fund with that fund house for a long time. The fund house is actually rotating that fund every month. But in SIP mode, you start with 1,000 rupees. So this month your fund house is actually investing 1,000 rupees. Next month when you give 2,000 rupees, your fund house is spending 2,000 rupees. So it's something that you get incremental, you get in a compounded way. So for the SIP ones, I have just generated the graph. You can see that if someone has invested for the last 20 or 25 years since the time of inception, so they would have paid by now almost 2,54,000 as a uh, premium, because they are investing 1,000 rupees per month. And the return that they can expect is like almost 27 lakhs. So you see that so the return that you are actually getting, it's like almost 971%. 907 is like almost 1,000 times your return. So if you have invested 10,000 rupees, if your total capital is 10,000 rupees, so 1,000 times means actually you're getting 1 lakh rupees. So it's a fabulous return that this particular mutual fund is given. And the annualized return on an average from the day of inception is 19.11. So friends, definitely I would say that this is something you should be keeping in your portfolio, because it is giving a very good return. Even if it is expensive now, I'm sure people who are into their mid 30s 40s, they would be capable of investing like more than 1,000 rupees a month. If that is the case, then definitely this is something wherein you should put in your thoughts and start investing now. Because there's not no correct time to get started. There's no absolute time wherein you can actually think of putting your money into, because mutual fund is something wherein you get the returns on a long term. It's not a short term return policy. So for a long term, if you see, obviously you see the benefits after 5 years or 10 years. So definitely it's a good time. Anytime you invest is a good time. Only thing is you have to give that fund a little bit of time so that it grows and it compounds your money. So I hope you like my video, and if you have liked this video, please share this with your friends and colleagues, and please do subscribe to my channel, and I'll be back with some educational video as soon as possible. Thank you so much. Have a nice day. Bye bye.